Welcome to the Winning Move Podcast. I'm your host, Stratton Brown. I interview successful entrepreneurs from around the world to see what moves they've made in their lives to get successful and, more importantly, stay successful. I'm here to make sure you can create a better life for you and your family. Let's tune in. Welcome to the Winning Move Podcast. We have probably my favorite guest, my good friend, Michael Zuber, coming to talk about the weekly financial updates of what, and I say like global updates because you really do talk like really global economics. I'd say American economics and then global economics and the whole, and whatever's going on and how you can capitalize on it. So thanks so much for coming on, Mike.
Thank you. I appreciate it. I love these conversations. It allows me to get out of my daily kind of grind and look at the bigger picture. So thank you for the opportunity.
Of course. All right. So I haven't been able to watch your daily financial news this week because I've been swamped. So what have been the biggest takeaway since the last time we talked? What did we talk last Wednesday?
Yeah. So I would tell you last Wednesday was a big day. It was the day I spoke to my
when
mortgage.
We broke news.
Yeah, we broke news. And basically, here's the deal. Winter is coming. Winter is coming. I suspect we are going to have a period of stagflation followed by recession and probably a nasty
Define
recession.
stagflation.
Stagflation is a time where you have very low growth. Think below trend. Think less than 1%, 2%. And inflation at 7, 8, 9, 10, 11, 12%.
18.
18. Bad, right? So high inflation, low growth, but not negative growth. That is what delineates stagflation versus a recession. So we're going to be in a stagflationary environment as the Federal Reserve raises rates. They did the first last week of a quarter point. More importantly, Jerome Powell this week said, in not so many words, in Fed speak, get ready for more. Goldman Sachs, myself included, called for May 3rd and 4th. We're going to get 50 basis points. June 15th, 16th, with the next two Fed meetings, we're going to get half a point. So we are going to go up, and we are going to go up fast. That is already changing the homeowners market, right? Just talked to my mortgage broker 100 days ago. 100 days ago, the average mortgage rate was below 3%. As of this morning, it's 4.6. Almost 200 basis points in a 100-day period. So there are buyers that were pre-approved that are no longer going to be approved. There are people that were expecting a $1,500 payment that's now $1,900. The homeowners are going to revolt. They're going to back away. Plus gas, plus food, plus all these things coming. So the Federal Reserve is going to raise rates. They're going to take it Fed funds to at least 3%, if not higher. This is just going to be a slow, just yucky environment. And then they're going to raise them too high. And then a recession will kick in. Inflation will eventually be killed. But we will have more unemployment, a yuckier environment, and winter. This could be a long season. Recessions are a natural part of the business cycle. They are not really to be. You shouldn't be afraid of recessions. They're natural. It's like winter, fall, spring, summer. It just happens. Unfortunately, the Fed for the last 12 years has tried to skip winter, prevent winter. And when that happens, you likely are set up for a pretty nasty winter once the system kicks in. And I want people to realize it's coming because, again, winters, if you're prepared, can be awesome. If you go back and look at my investing career, which is nearly 3 decades in the making now, a lot of the best purchases and stuff that we still talk about were bought during a recession because we were prepared. If you prepare for what is coming, you can thrive. But if you try to just pretend like it doesn't affect you or your shit doesn't stink or whatever, you're going to go bust. I knew plenty of people that were worth 7 and 8 figures last time who thought they were super secret and super special that got smoked because the market will get you. You cannot remain solvent long enough, right? Winters have a dark side, but you got to be prepared. And if you are prepared, you can survive. The first thing is prepare, then survive, then thrive. And I'm convinced that's what's coming.
Well, and I think it's a good thing. I do truly think you need to stop the inflation and stop the dollar from collapsing.
Yeah, I mean, somebody did some math for me the other day on the Fortune or the S&P. No, I think it was the Nasdaq. Yeah, it was the Nasdaq. This is an unbelievable number. 20% of the Nasdaq stocks have never made any money. That means they are
Right.
surviving on debt.
Yeah.
All right. And there was a time where your valuation was, 100 times revenue. I'm sorry, the world's over. Now it's going to be 50 times earnings. It's a different multiple. And again, what's going to happen is there will be companies that get bought because they can't survive. There'll be companies that close their doors. It is part of the cycle. What is happening right now, simply said, is risk is being repriced. We had 3 years, 2 years, 10 years, whatever you want to call it, of below trend rates. People got fat, dumb, and lazy. If you are getting 0% in the savings account, which all of us are, you're starving for 4%. We got fat, dumb, and lazy. And now it's time for winter.
The way we talked about last week, I'm starting to learn about like selling your company, getting prepared for an exit, and the way things sell multiples. And the way everyone's talking about now is like all of the venture capital funds have like pulled back. Like, no.
No, absolutely.
Like,
early stage, late stage. Yeah. All of it's being repriced. Risk is being repriced.
That has been crazy. What's another big takeaway from since last Wednesday, besides winter is coming? And for everybody, I do think it's a good thing. I think overall, we should have, like you said, we should have raised it 0.5 point instead of 1/4 point.
Yep.
I am more concerned about the American dollar than anything else.
Well, let's talk about that. So certainly I see it out there. I see all this, risk of the American dollar going to zero. Nobody trusts. China now potentially buying oil in the yuan versus the USD. There's an OPEC dollar, right? That's one of the things that makes the dollar the reserve currency of the world. There's talk that Saudi Arabia and China will transact in something other than the dollar, probably the Chinese yuan. All of those headlines are true. Certainly could happen. But why are you concerned about the US dollar?
As far as inflation goes, and it just losing like hyperinflation to where you can't even create returns that'll beat it. Like when you're at 18%, like it is very, very hard to create regular returns that'll beat that aren't risk heavy.
Agreed.
In my personal, unless you're doing business, like in real estate, like you're going to be hard. You're going to be still losing. Let's say we get a 10% return. Okay, you're still losing 8% on your money year over year. And all naturally they say, yeah, and inflation's like 8%. No, it's like 18%. Then you include gas, you include all this other bullshit. So that is what has me concerned, is being able to create an asset that can actually beat inflation over time. And if I can't do that, then what am I supposed to do?
Yeah, unfortunately, the Fed has made its bed, and now we all have to suffer it. Yeah, inflation certainly is already double digits, and I have bad news for you. It's going to get worse for the next 90 to 120 days, 3 to 4 months. It just is. It just is. I mean, you can stick your head in the sand, but it's going to be worse in 3 to 4 months. That said, everything you just said is absolutely true. Getting 15% return in a standard real estate investment or running a business, it's going to be hard. That said, the good news is you don't have to do a deal, first off. Second, and I just talked to Anna Kelly this morning, who I talk to every Wednesday, and she's like 90% of the syndications are using bridge debt.
Yeah.
And those are going to blow up. There are lots of syndications today that the LPs have already lost their money and they don't know. Why is that important? Because 2 or 3 years from now, if you have dry powder, you're going to be in a great place. This is what Jamie Dimon and Warren Buffett told us 6 months ago. They were stacking cash early, and they don't give a rat's ass that they're losing 10%, because what they're going to do is they're going to go buy assets for 40% off. So what I would tell you to do today is, who cares? You can't get 15% stacked cash. Yes, I know inflation is eating it, but trust me, as somebody who bought apartments for zero down in the last crisis, I was able to do that because I had the financial reserves to show the bank that I could take it over and not risk losing it again. Don't be in a rush. This is not a time to burn cash. Cash is not trash. Cash is an option on future opportunities. This is the time to stack cash. If you can't get a 15% return, great, stack more cash. Can't get a return, great, stack more cash. The dollar is not going anywhere. I'm 50 years old, and the dollar is not going to lose the reserve currency in my lifetime. It's just not. There's
You
nothing
really
big
don't.
enough.
Even after
No,
reading Ray Dalio's book?
not going to happen. There's no currency out there with the rule of law and all of this. The only thing that could happen is a basket of goods, but good luck getting companies to agree. I have Ray Dalio's book somewhere up there. It's not.
I don't think the yuan will do it because nobody trusts the Chinese government.
Exactly. Nobody trusts the Chinese. The yuan's in the second place. It's not going to happen. What's it going to be? The Russian ruble? Are you freaking kidding me? You think it's going to be Bitcoin with their 23? Not going to happen. No, it's not going to happen. It's one of those things that all these scaremongers put out there that the average person's like, oh my God, the reserve currency. Don't even know what the fucking reserve currency of the world means, but you think we're going to lose it. I mean, the people out there that think they understand economics that don't is mind-boggling.
It's good to hear you cuss for once. You don't cuss
Yeah,
on the YouTube channel.
I don't. This is your channel, so I can't.
This is my channel, so you can cuss.
Thank you.
All right. So what is the next biggest takeaway?
Again, inflation is real. We got more numbers on that. Actually, you know what? The other big thing, again, I talked about it on my daily financial news. The Chinese real estate market is imploding. It's not talked about.
That's a wild situation.
Yeah. So there's a company that probably everybody's heard of called Evergrande. It made the news because they're the second largest property developer, but they had something like 300 billion in debt, something like that. What happened is the Chinese government basically scared consumers. And this is what's happening in the US right now. But in China, they don't really have 401ks and pensions and stuff like that. In China, how you created your retirement is you bought a second home. And they don't really do 30-year mortgages and all this. So people save for decades, but that is their retirement. And that's why they have empty cities and empty buildings and all of this. But over the last 2 years, they have scared the consumers, Evergrande being the greatest headline. They've now destroyed entire apartment buildings that were never occupied. They're trying to strip supply, and that has scared the consumer. So the Chinese citizens already saved more than us. Now they're saving any more. They're not buying Starbucks, not buying Nike, not buying a second home. And Evergrande's transactions, it was reported on Sunday, our Sunday, their Monday, I guess. Their real estate transactions are down 90%. And if you're a business operator of any kind, you have this statement called cash flow. It's called a cash flow statement. And at the very top of the cash flow for Evergrande is sales of property. And then below that, their expenses, their employees, their suppliers, their cost of debt. Trust me, if their transactions at the stop fell 90%, they are dead man walking. Oxygen, blood, whatever you want to call it, is not moving. Evergrande is dead. Their only hope is the country nationalizes it and bails them out. Business is business around the world. And that's why when you understand real estate and economics, you can call these things. And I called Evergrande dead 9 months ago because it's all about the cash flow statement. You want to talk about net worth and I'm a millionaire. Do you want to talk about how high your income is? Man, if you don't have any cash flow or your cash flow is not aligned, you're toast. It doesn't matter.
Yeah. Cash is not king. Cash flow is king. Cash flow is king.
Absolutely. No question. I mean, yeah, absolutely.
So how are they still alive? Because I remember you talking about this shit a while ago, and like them selling yachts and everything else just to cover debts. And then now it's being subsidized like everything else that happened in 2008?
Essentially. So again, they sold off all the easy stuff. Then the owner of the company sold off about $1 billion of personal wealth. Then they delayed payments, right? So again, all these things are, so you sell stuff that adds cash. The owner adds cash. Then you start delaying things. You don't pay suppliers. That's going to piss off some suppliers. Then you don't pay the bondholders. That's going to piss off some bondholders. And at this point, the country has clearly come in and started to nationalize. The only thing that they could do is sell off in pieces, but it'll be pennies on the dollar. Lots of people are going to lose. It's not going to end well. And it's all because the consumer, why I have studied the consumer my whole life, the consumer has lost faith in real estate in China, worse than we did during the Great Recession. So there will be half as many property developers in China in 24 months than there are today. Just like us, there were lots of mom and pop builders back in the day. Go through the Great Recession, building doesn't work. There's not as many. There's some behemoths, Pulte, Lehman, or
Yeah,
Lennar,
Horton. Yeah.
Horton. There's, it's happening right now.
What do you think about the U.S. coming out with like all this crypto news and how they're trying to create their own crypto?
So I think a
And all
digital
this other
dollar.
stuff.
I think a digital dollar happens, whatever that is. Whether you, I think the U.S. government is going to be very clear and not call it crypto. I think they're just going to call it the digital dollar, and they're going to
I
do
think it's the
everything.
scariest thing ever.
Oh, absolutely. Oh my God. Yeah, and they're going to sell it as helping the non-banked and all these things, but essentially relying on the U.S. government, who could change their whims at the.
Yeah.
It's just frightening to think about. Just frightening to think about.
I mean, because at this point, right, what changes you from China, and then you saw what happened in Canada, how they tried to like freeze certain wallets. Okay, just create another wallet, and like you can prevent that. But then now, let's say they have their own currency, and then everything gets frozen automatically, no matter what. To where, yes, now in certain investigations they can do those things and seize assets, but
No,
then it gets even sketchier to where they don't even need to go through courts or anything else. That's what freaks me out. And like you're going to lose cash. To where there should always be cash. There should not. I don't think there should be that much surveillance. Like now, you're like a surveyed state.
Yeah, no, the digital dollar frightens me, because we already know the U.S. government, president included, both of the last two presidents are willing to do things that are unconstitutional. People forget this. President Trump, who is a real estate guy, he enacted what was later proved to be unconstitutional. Eviction moratorium. He did that.
Yeah.
Right? Now Biden extended it and all that stuff. And then Biden came out with these vaccine mandates. Again, unconstitutional. They both did that because it was in our best interest, and they knew it would take the courts a year or more
to fucking get
to
through
finally rule. Do I want to give these power-hungry folks who want to do their best wishes control over my money in a nanosecond? And oh yeah, sure, maybe in a year and a half it'll be ruled unconstitutional and I'll get my money back, but fuck, I'm already starved to death by then.
Yeah.
No thanks.
Yeah, that is the one thing that freaked me out that I heard about, and I was like, oh no, this is no. I think regular crypto will go up more, and I know they're trying to like regulate crypto more and everything else, but I think it'll only increase the value in that. If we lose cash, it goes into cryptocurrency.
Well, here's the deal. You and I talked, I think it was 4 months ago. We had a bet. I think the bet was, I think I said something like half of the top 10 cryptos will go to zero. I think crypto's here to stay. I think the strong get stronger. I frankly think there are too many coins today. I think a large percentage of them are set up to be rug pulls. I think there should be more regulation than less in this space. But yeah, long term, crypto will be here.
Well, it's the Wild West, dude. Oh, crypto is the Wild West.
Yeah, and it needs some more regulation. It just does.
Yeah, that I don't think. So crypto is fascinating because it's the only business ever to where you can raise close to $1 billion without any product, without like any real company or anything else behind it. This is all, it's Web3. All right, take my money. And you can raise $1 billion for having a Web3 project and nobody bats an eye. You can't do that in like regular business. Like it's a completely different world. So I think that is inherently like the bubble that's going on.
Agreed. No, it'll yeah. Again, I am pro crypto. I have 1% of my net worth in it. And but I will also tell you, I think there's a lot of criminals and bad actors in this space.
All right. Next biggest takeaway from the week.
I guess, yeah, the next one is, again, a couple of mortgage brokers and real estate agents called me and talked about buyers backing out of deals. I think real estate transactions are going to fall 25%. I put out a headline yesterday.
Over what time period?
By August.
Okay.
By August. So this is a relatively short-term call. So let's be specific. Right now, if you take the monthly closings and you annualize it, we're right around 6 million units closed in a year. I believe once you take August annualized closes, which will be reported in September, we're going to be sub 5 million. So that's interesting. right? So real estate agents, real estate brokers, you better get ready for less transactions. Mortgage brokers, your business is already cratering. Refis are down 75%. I think flippers need to be very careful. I think days on market, cost of capital are going up. I think I said a year ago, Omar, my Tuesday expert, and I said it was the best time ever to flip. Now, not so much. Just think about the buyer, right? The person who's buying your perfect product. Their payments have gone up 27% in many cases when you take price and rate increase. So this is a dangerous time, right? If I think winter is coming, I think we have a little time to be prepared. I wouldn't do a skinny deal today. There was a time where I would do a deal where I saw 25 or 30K in profit, which in our market is skinny. I wouldn't do that deal today. I think carrying cost is going up. Every month of carrying cost hurts. I think supplies and dead days are going to get worse, not better. Where a year ago I said it was the best time to flip, I think what we're heading into is perhaps one of the most dangerous times to flip. So yeah, it's winter's coming. It's going to hurt a lot of people who aren't prepared. I'm super excited because I've been telling my channel I've been getting
2 years
prepared for 6 months. Yeah, big time. So I'm excited. I hope a lot of people are listening, but yeah, I'm excited for myself what's coming, but I'm nervous for most.
Yeah, for the consumer.
Yep.
We got a question. I don't know if you know answers to this. I have my own personal opinions. And Facebook user, we put your name in the field. Thoughts on staking and yield farming crypto? I'll go first.
Yeah, go ahead.
Put in an amount of money that you're not afraid to lose. And then as soon as you make that money back, pull the principal out and let it keep rolling. Like that is generally my principle. When all the DAOs came out, like everybody's like, oh, DAOs are the future, DAOs are the future. And then everybody legitimately got their asses handed to them as all of the DAOs fucking went to zero. And like, so Time Wonderland went to zero. What was it? Jade went to zero. Hector DAO went to zero. All of these DAOs that were like giving you insane returns, saying they'd burn off stuff. But again, it's crypto. It's not regulated. And so do I know how this shit fucking makes money? No. Is it making me money? Yes. And so if I don't fully understand it, take fun money, put it into it until you become like an expert at it. That's what I'd tell you to do. But if you were an expert at it, you wouldn't be asking the question. What about you, Mike?
Yeah, so I'm much older, more risk averse. I've lost tens of thousands of dollars before on bad investments. Frankly, in my world, if it's too hard to understand, you ain't getting my money. I had somebody try to explain to me yesterday or about a month ago how I could take my 1%, put it in this and that and earn 12, 15%. He talked for like 12 minutes, just like a shotgun, and I didn't understand it. I'm like, nope, too hard. I'm out.
But that is crypto though. Like, so like,
if it's too hard, I don't care.
Processes are like multiple steps over time to where I don't suggest you do it unless you fully understand it.
Too hard. Buy and hold works. I have 1% of my net worth. It's not changing. I'm comfortable buying hold. I'm comfortable with it going to zero. But if you've got to go through 17, 7, 12 daisy chain things, all it takes is one of those to go to zero to break. Nah, it's too hard.
This is Zach Anosa. What's going on, boss? Do you have any other things to leave us with, Mr. Financial World Guru?
What I would tell you again, winters are natural. Winters, if you prepare for them, are awesome. Most of my financial net worth has been generated in winters. Unfortunately, very few prepare, and thus they're tough to survive. But if you've prepared, winters are to be thrived. Winters are awesome. But you got to get ready.
I love it. Thank you guys so much for tuning in. Mike, where can they find out more about you?
One rental at a time. Website, YouTube, books, all that stuff.
And Instagram.
And Twitter. And this and that.
Are you active on Twitter?
I post once or twice a day. I should say your team posts once a day.
I mean, because now I'm like learning more about it. And there's a lot of shit going on in there as far as like the tech space and business world. But I feel like it's the most toxic place on the planet. So I don't want to be on there.
It's pretty bad, but they're all pretty bad.
Thank you guys so much for tuning in. Thank you so much for tuning into this episode of the Winning Move Podcast. I hope it helps you make all the right moves in your life and business. Please make sure to go like and subscribe on any podcast platform that you're listening to, and make sure to go follow me on Instagram @StratDaddy. Thank you guys so much. I'll talk to you soon.